Hello friends, welcome back. Today we are discussing the natural science of counting the bars. This is chart of ES futures. And what we have done to this chart is selected a time frame which is in sync with the frequency of ES. There are 33 frequencies in each instrument. We use 9 frequencies and we combine them. Now you think about trigonometrical scenarios where each price point, you can just use the close of each of these points and generate a sine or cosine waves from each point and create a matrix. So you have a matrix of sine frequencies, and then we create a vectors of those frequencies, and then we create what we call as the eigenvector, the unit vector. All right, once you identify those numbers and use one of those frequencies to freeze one part of the equation. So in stock market, what does the equation look like? Market is going to go up, down, or sideways. Market is also going to turn on a specific time frame because there is a price component, there is a time component, and there is a direction bias component. So today we are discussing by freezing the time component, we can bring the counter into the equation. So when I say freezing the time, that means I have taken the frequency of ES and I have converted that into the time frame I'm showing here. By doing that, I have isolated 4 variables or 3 variables or 2 variables into one variable space where I want to in higher dimensions. What happens is in higher dimensions, if I give you 100 dimensions to look at, it's hard to comprehend because we look into 3 dimensions and 2 dimensions. So we bring down those dimensions and only expose the critical frequencies of interest, the critical features of interest, without changing the axis of the information. In trading terms, if I'm saying market is going here and I have 50 points describing this scenarios, right, or 100 or 1000, how do I know, right? In high, you can go to thousands of these. You cannot see because market is not linear, market is non-linear. So if I can project these points back to the line and find out a way where the maximum variance can be described without changing the axis, I can, by doing that, right, we can still get the information in a human usable form. So that is why if you in trading, how many dimensions do we have? It's not 100 dimensions. I mean, you can create 100 dimensions by adding 100 oscillators to it, and most of the features will be correlated, so we have to get rid of the correlationships, find out the most variant of these variables which is describing the situation. Otherwise you just if you use two oscillators, just to simplify that, if you use two oscillators showing the same thing, you found no extra information by using two, just use one, right? So that is why, now to simplify it even further and further and further, if you have the frequency of the market, then you freeze that either in price or in time. So we can use, we are reducing the variables further. So instead of having three people, three descriptions, three vice presidents of the company describing the situation, CEO says the final word, right? Because he's not looking at 50,000 employees giving him the feed. He's only getting feed from the board, right? Because that's already has been filtered out. So he is getting the best of the 10 best informations, and then he's just making the final decision. So that is how the structure is, like a tree structure, right? Tree has branches, branches have leaves, and we consolidate all the information upstream. Because the same thing happens here. We have so many dimensions in 4D, we cannot see 4D in the market. We only is looking at 2D here. We can't even see 3D in the market, right? So how do I get this 4D information compressed into 2D? I have to freeze some part of the equation. Here in market, we can freeze the time, or we can freeze the ranges, or we can freeze the price, or the time, or volatility, right? So that's what we're gonna do. So the reason I'm saying all this is, if you think about the market is 4 dimension, I have to freeze 2 dimensions out of it. What dimensions will you freeze? And once you freeze those, maybe you can freeze 3 dimensions. So that means the last variable can be now trusted. And that is what I'm discussing here right now, that we got to freeze those dimensions. And then once that is frozen, we can now expose the information not visible otherwise. And also remember that the frequency doubles. Energy doubles or goes in it doesn't goes in fractions. Now, the irony of the situation is, natural sciences goes in 1, 2, 3, 4, 1, 2, 4, 8, 16, but even those natural numbers, when we do some manipulation on those numbers, they become fractions. So there's a relationship between fraction numbers and the whole numbers. So we can convert degrees to price, price to time, and time is unfolding in the 4th dimension. So I have frozen all these dimensions here. And I'm going to use a simple thing called bar counter, count the bars. And this frequency of ES, as you said, gets reset at value of 10. And 10, 20, double 40, 80, all these things should work. Okay, so we're going to just do doubling circuit effect. And for that, we're just going to use the counters. So from here to here, we should see 10, 20, 40, 60 play out nicely. So I'm just going to go to, this is 1, 2, 3, 4 month charts. Will not spend too much time. The reason I made this whole 8-minute chit chat on this subject is, in your softwares, you can freeze things. You can say, I got this frequency right, so let me make a chart of, say, 9 minutes, or make a chart of 72 minutes, right? So if you understand the frequency of that market, and let's say frequency is 72 vibration, you can make 72 as a time frame for the time. Why 1 minute? Why 5 minutes randomly? No, make it 72 minutes chart, and then you see things will get exposed. And this is what I did here. I used the frequency, I froze in time, and now I'm going to expose the vibration part of it in the counter terms. So 20 is right here. So 20, 40, 60 will all work. So let's see. 10, 20, 40. Okay, where is 20, 20? This is on a weekend. No problem. So let's go to 40. It's off by a bar. That's okay. We can just put it here. So from the top to top, we got 20 on the top. I'm going after frequency of 10 vibrations, right? That's all. And I'm going to use the idea of energy going to be okay. So why did I use that point? Because this is where it ended. That's one trick we have to understand is don't just take the top you think the top is. The frequency is saying the top should be here, and it came, right? Because remember, this bar is not able to close above this top. If they try to, flushing is going on. We understand those things. I'm just marking these levels. Now from here 20 is also going to come, right? So again we have to do it from the big swing points only. From here 20 came, double whammy, and then we got a zoom, big move. I'm talking about these are 100 point moves. We're not talking about these are the swing point moves, so you can have a direction bias where we are going to go from. Okay, so these things were done on this week. We got all the moves. This is already going down, so we will use maybe this new frequency. If I do it from our endpoint, okay, it's off by a bar. 10, 20, 30, 40. That's all I'm looking for. Full numbers. We can use this 20. Now obviously you can use the price targets as well. This is for timing the market. Timing the market. Timing the market. All the levels are 10 is here. All right, we're almost done. We can also look at a higher frequency. There's a lot more to go. All right, I just wanted to show, excuse me, few of them, but well, let's mark it. What is better than 1 month? Hey, 2 months. Oopsie. All right. Mm-hmm. 20 comes here, from there as well, bottom to top, top to bottom, top to bottom, top to top, sorry. All right, I think we are getting close. All right, so here what we can also look at is bigger frequencies, 20, 40. You can also look at 60. But I think you got the point. This is a sideways market, but it's okay. We're gonna keep going. This one doesn't look like it did anything useful for us. So I will not go too far away. Now this is a 100 is good because remember 100 is good. Why? Because remember we are looking at 10 frequency. 10 times 10 is even a square. This one squared it. There's a lot of things you need to understand about the market. What is really going on? All right, so let's see. If you were here, we can look. 89 is again a number, very strong numbers. 90, but we are not doing those numbers. We are just doing, as I said, from our pivots, some numbers from our pivots. Okay, so this, let's go to 40, 20, 10, 20, 40. Keep it simple, right? There are other things you don't understand right now. I'm just showing you the very basic functionality, how the market can be just simply timed by just doing the bar counter, right? This one showed up here. This one showed up here. $38, $39, $40 is somewhere here on the top. So energy is being unleashed. Let me do it properly. From here, we got here, right? So these bars are, they're not able to close above this. They're just somehow naturally they try to flush it and just can't close, and this, you've seen this pattern over and over. All right. Simple bar counting is all you need to get started. Okay, so from here, I need to find, I think we got, let's see, this bottom. 40 is coming there. What did we miss here? I think we got most of it. This week was choppy, didn't get anything. So let's see. All right, so from here, if I want to do 20, it's coming here. If I want to do 40, 40 is coming there. Hard to say without looking into other things. I would have taken this as a possibly long, because we also have a buyer sitting here. So I could have biased it to the long side. So we'll not mark it, we'll mark it. We got a loss here, so I'll mark it a different color. If we're confused, we're confused. I mean, we can't be 100% right. So what else missing here is let's go to $10. Market is going aggressively. It went back aggressively. So this is how you can, we went different months here. We almost went to, this is 1 week. 1, 2, 3, 4, 5, 6, 7 weeks. And I think we got all 4, 5, 6, 7, 8 weeks, almost 2 months, and we got all the movements, right? Now we can do a lot more. Let's say what happened here. I just need to close it. Oh. Excuse me. Tool is misbehaving. So let's see. Okay, from this point, I'm looking for 40, and here is your 40. Let's move it here, and there we go. So I think we just showed you what can be done in a simple ways for timing the market. Thank you so much.